Good day, everyone, and welcome to our webinar for May 2025. We begin as usual in America, where of course there's been a lot of drama over the Trump tariffs. Now, if you look at the chart on your screen, the S&P 500, what we can say is that when Trump took over on the 20th of January 2025, both the economy and the stock market were booming. He has derailed that boom with his tariffs and caused the S&P 500 to do a 19% correction. That correction is a direct result of his interference in a strong upward trend. And of course, when he started backpedaling on his tariffs, then the market began to recover. So if you look at the chart here, you can see that there was a high point at 6144 on the 19th of February, and then a 19% correction, which took the market down all the way down to 4982. You can see on the chart here I've identified it. And that happened on the 8th of April this year. The drop was altogether 1,162 points. And since then, it has recovered about 704 points, or about 60% of what it lost. The fall, as I've said, was entirely due to Trump's tariff strategy, and the recovery is due to his backpedaling on those tariffs. In technical analysis, corrections like this usually take place in three distinct waves. So those waves are called A, B, and C. A is the initial downward trend, which you see on your screen here, from the high of 6144 to the low of 4982. That would be the A move. B is a recovery, which is what we are seeing now. And normally, in technical analysis, a recovery is about 50% of the initial fall. So as I said to you just now, the initial fall was 1,162 points. So 50% of that would be 581 points, right? 581 points, which is half of 1,162. And if you add that 581 points onto the low point of 4,982, you get a figure of 5563. So the 50% recovery on the S&P 500 is 5563. Now we have to decide what is going to happen next on the S&P. In my experience, when that recovery is passed, when that 50% level is passed, the chances that there will be a C wave down, a C leg down, diminish. And the further you go towards the record high here of 6144 now, the less likely that becomes. So we're already at 60%, which means we are a good 10% above the 50% level. The further this recovery goes, the lower the probability of that C leg down becomes. The recovery shows us that investors are becoming more and more confident that Trump's Liberation Day announcement was really a lot of hot air. What will actually be implemented is a far cry from what he was talking about on the 2nd of April at his Liberation Day. It will be only a fraction of that. Even he acknowledges that now. And so investors are busy buying the dip. This is what they do. They're buying the dip in hopes of capitalizing on the fact that the S&P will sooner or later beat this record high here, which occurred on the 19th of February at 6144. What is interesting is that in JSE the investors on the JSE never took Donald Trump's downward trend very seriously. So if we go to the JSE overall, I just need to get that on the screen. if we look at the overall index, you can see that it really only fell for these 2 days. Okay, so there you can see Trump's Liberation Day, right? That is where Wall Street made its record high on the 19th of February, and our market continued to go up because our investors were confident of the upward trend. This day here was Trump's Liberation Day, and as you can see, we had 2 down days on the JSE on the JSE All Overall Index, and then the Wall Street reached its low point here on the 7th of April, and then started to trend up. And you'll notice that our market has very quickly recovered what it lost and has gone on to make new record highs up here. So that is a very important point. Local investors never took Trump's tariffs very seriously. And if we go back to that S&P chart, you can see that the low point here came on this day, which was the 7th of April. And that day was very volatile. And I actually posted a tweet on X in which I said that the low would probably be at about 4,800 on the S&P 500. The actual low came in at 4,835, and then after that it's been recovering as Trump has been backpedaling. Now let us consider how the US economy is doing. It's actually doing pretty well. It's in the process of completing that soft landing, which was always the target of the Federal Reserve Bank. So Jerome Powell and the Monetary Policy Committee in America were always trying to execute a soft landing. In other words, to increase interest rates to contain inflation, but to do it in such a way that the economy avoided a recession. Now, growth in America has certainly slowed down. You probably noticed that the GDP in America actually shrank in the first quarter of this year by 0.3%. And that was mainly because of a surge in imports. In other words, people who make their business in America by importing overseas products doubled and tripled their orders in order to get in ahead of Trump's tariffs. And that resulted in a 40% increase in imports. And that had caused, obviously, GDP to decline in the short term. Another factor was that there was a sharp decline in consumer spending. Obviously, consumers are very aware of what is going on, and they are nervous about what is going to be the result of Trump's tariffs and their policy. Another factor, of course, has been Elon Musk's Department of Government Efficiency, which has been cutting people's jobs left, right, and center, and that's caused people to feel nervous and unsure, especially if they work for the government or they are dependent on government payments. More evidence of a soft landing came from the April jobs numbers. The U.S. economy in April created 177,000 new jobs. That is less than March's 228,000, but is still far better than economists' predictions of 133,000. The unemployment rate was steady at 4.2%. These figures show that the economy is still growing, despite the tariffs. The underlying forces in the bull market remain intact. Productivity gains from such new technologies as artificial intelligence, humanoid robotics, and also the advances made in renewable energy are all increasing the profits of S&P 500 companies. All that was needed for the bull to resume was for Trump to back down, and that's exactly what he's doing. And the GDP figure of minus 0.3 is a lot better than what was predicted by the Atlanta Federal Reserve Bank, which was minus 3.7. And that prediction was made immediately after Trump's Liberation Day. At that time, the Atlanta Fed estimated that the cost of manufacturing a vehicle in America would increase by between $3,000 and $12,000. General Motors shares at the time fell by 8% on the announcement, and Goldman Sachs, a very prestigious American bank, said that the U.S. economy would enter a recession. There was a 35% probability that the U.S. economy would enter a recession, and they said the Fed would have to cut rates 3 times in 2025 to counter this. They predicted that the S&P 500 would end the year 5,700, which is considerably lower than their previous prediction of 6,200. All of that was based on average U.S. tariffs going up by what was estimated to be 15% in 2025. They also said that the European economy would fall into a recession. The IMF sharply reduced its growth forecast for the world economy and for the American economy. They dropped their forecast by 0.9% to 1.8%. Of course, if 145% tariffs were applied to Chinese goods coming into America and 125% tariffs to U.S. goods going into China, that would basically mean that all trade between the world's 2 largest economies would simply come to a halt. Already, container deliveries to Long Beach in California are down 35%. Trump is now talking about negotiating with China, and that, of course, is more backpedaling. On top of this, Trump does not really like Jerome Powell, who's the chairman of the Federal Reserve Bank. He says that Powell should cut interest rates quickly. Like most central banks, the Fed is independent of Trump, and this is true of most countries around the world. But like most dictators, Trump is keen to control the Fed. Powell's term ends in May 2026, which is a problem for Trump, and he's been attacking Powell, and that is creating a lot more uncertainty for investors. Central banks around the world have been dumping United States Treasury bills. In fact, their ownership of Treasury bills is down to 57.8% last year. That's down from 66% in 2015. They are steadily reducing their reliance on the US dollar in a process which has become known as de-dollarization. The process has obviously gained momentum with Trump's tariff wars. Confidence in the Fed has been sharply reduced. Money all over the world is moving to European Treasury bills and, of course, into gold. The US government has $29 trillion in bonds. In other words, it owes people $29 trillion through its US Treasury bills. And 30% of that money is held by foreigners, in other words, outside of America. So that makes them very vulnerable to a sell-off of US T-bills. Trump's first 100 days in office have seen the collapse of both the equity market, the share market, and the bond market. His approval rating has also collapsed to the lowest level of any president after 100 days. He has attacked the media, the universities, and the Federal Reserve Bank, and he's arranged for the illegal deportation of immigrants without due process. He's also failed to negotiate a peace deal in the Ukraine war, which he said he would do. In our opinion, he will probably lose control of both the House and the Senate in the midterms, and that will make him a lame dog president in due course. All right, let us turn our attention now to Ukraine. Putin, of course, ignored the ceasefire which Ukraine agreed to about 2 months ago. It is clear that he does not really want the war to end. I think he is afraid that he might not survive politically if the war does end. And now, of course, Ukraine has signed a deal with the US, which President Zelensky describes as as a truly equal agreement. And this shows that perhaps Trump is moving away from Russia and towards Ukraine. Trump, of course, is embarrassed because he has not yet negotiated a peace deal. And most Americans are in favor of America supporting Ukraine. Now, of course, Putin has announced another conscription of 160,000 men. So it's clear that he intends to continue with the war. And now Russia has also declared a unilateral ceasefire to cover their May the 9th victory celebrations, which take place in 2 days from now. And those victory celebrations will be attended by 29 heads of state, including China's Xi Jinping. Obviously, they do not want a massive Ukrainian drone attack on that day. But while Ukraine has not accepted this ceasefire, in our view, it's unlikely that they will actually attack, but you don't know. Obviously, if they could even send drones there without explosives and just land them in the middle of the parade, it would seriously embarrass Putin, and it would show their capabilities. And of course, they have enormous capabilities in drone warfare. One of the most recent things to happen in Ukraine has been that Ukraine shot down a Russian Su-34 fighter with a sea drone. This is the first. It's never happened anywhere in the world before, and it shows how technology is changing warfare. The $50 million Su-34 fighter jet, Russian fighter jet, was destroyed by a Sidewinder missile fired from a Magura V-5 marine drone. And this all happened near the port of Novorossiysk, which is well inside Russian territory. Russia really has no answer for this. Indeed, all the navies and air forces around the world are taking note of what has happened here, and they will have to adjust their tactics in order to take this into account. So Ukraine has made huge steps, huge strides in terms of the technology of drone warfare. If they can take out a fighter jet, an Su-34, with a missile fired from a sea drone, everything changes. Of course, the Russian economy is taking enormous strain with 21% interest rates. Inflation is estimated to be around 70%, way ahead of the official figure. And of course, a consequence of Trump's tariffs has been to cause the oil price to drop. So let's take a look at that, because that is definitely significant. North Sea Brent oil has dropped to $61 a barrel. I'm going to put a bit more data on the screen here. Say go to that. Now you can see how the oil price has collapsed. It was up a little bit last night, but it fell all the way down to $61 a barrel. And it's broken through the long-established support level at 72, which is also important. One of the reasons for this is that Saudi Arabia has been increasing oil sales. But at this level, Russia's oil economy is in deep trouble. In our view, Russia will not be able to continue this war into next year. That is what we think. All right, let's draw our attention now to South Africa, and particularly to the political developments in this country. The DA's decision to oppose the ANC's 2% VAT hike was a very good move from a political point of view. Now finally the ANC has been forced to back down completely. They're now working on a third iteration of the budget without any VAT increase at all. Of course, almost nobody in South Africa wants VAT to go up. So this has been a strong benefit for the DA. It's a win for them. Judge Dennis Davis says that even the 0.5% compromise which the ANC tried to put through was in fact unnecessary, because the 13.5 billion rand it would have raised could easily be found elsewhere in the budget, which of course is $2 trillion or $2,000 billion. Rands. And one of the results of this has been seen in the latest Institute of Race Relations poll. The Institute of Race Relations conducts a very prestigious poll, very widely received and approved of, And in that poll, for the first time, the DA got more support than the ANC. The DA got 30.3% and the ANC logged only 29.7%. It's the first time the DA has ever come in ahead of the ANC in this poll. And it's probably due to the DA's opposition to the VAT increase. Clearly, the ANC has continued to lose ground since last May's election. Talks are taking place between America and South Africa on trade. They're led by our Minister Parks Tau, and they should include a negotiation on our position in the African Growth and Opportunity Act. Trump's 25% tariff on South African imports has been temporarily suspended. Of course, South Africa's main export to America is platinum group metals. And then, of course, we sell some vehicles and parts, and also some agricultural produce in America. Our objective would be to completely eliminate all tariffs on everything. And of course, we believe here that we've always believed that Trump would back down on his tariffs. So maybe we'll see that coming out here. The South African Reserve Bank has conducted a model which shows that if all the US tariffs are in fact implemented, our gross domestic product would be reduced by 0.7%. Obviously, we will do everything to avoid these tariffs, and we will try to improve the South Africa-US relations, but the impact of the worst-case scenario is not too bad. The bank estimates that the rand would fall 15% and inflation would increase by 1.25%. But neither of those is a train smash for this country. Of course, it would reduce the economic benefit of the Government of National Unity and the end of load shedding, which we have all been benefiting from. All right, let's take a look at the economy. Trump's 30% tariff on South Africa is added to the 25% tariff on motor vehicles, and this will have, if it's implemented, a major impact on our motor industry. We're not sure whether the African Growth and Opportunity Act will continue, given the tariffs which have been placed on about 50 African countries, and that could impact on our agricultural sector and on farm products. Last year in 2024, South Africa exported about 25,500 vehicles to America, worth about 28 billion rand. This will be affected by the new 25% US tariff. Americans will have to pay 25% more for South African-made cars. This will give US-made vehicles a price advantage. But America is only our third largest market for motor vehicles. They account for about 10% of our total exports of 270 billion. So the impact is not that great. South Africa's sales of new vehicles in March were up 25% over March 2024. And March quarter sales for the whole 3 months were up 10% on the same quarter last year. Sales of light commercial vehicles and buckies were down 8.4%, but overall this is the 6th month that total vehicle sales have increased. This is caused by declining interest rates and also the end of load shedding. But if we lose our position in the African Growth and Opportunity Act, it will certainly be a problem for the motoring industry. Okay, manufacturing fell by 3.2% in February 2025, mostly because of a 15% drop in vehicle sales. This comes after a 3.3% drop in January. So manufacturing is still taking a bit of a nosedive. The consumer price index for March was just 2.7%, down from February's 3.2%. And well below economists' predictions of 3%. It's also below the lower end of the Reserve Bank's target range, and that opens the way for more interest rate declines. Rates, of course, were held unchanged in March, and the next MPC meeting is busy taking place now. Given the volatile state of the world economy, it's unlikely that interest rates will be reduced at this meeting, but I think that there is a high probability that they will be reduced before the end of the year. One of the reasons for the drop in inflation has been a surprising drop in rentals and the cost of education. The BankServe take-home pay index shows that salaries were 2.5% lower in March than they were in February, but still up 11.4% on the same month last year. Now, if you take the inflation rate of 2.7% off that 11.4%, it means that salary earners were 9% better off in real terms in March than they were in March last year. The CPI, or the inflation rate, has fallen quickly, and it's having a big impact on consumer spending. The extra money which salary earners are getting will help them to counter the lack of adjustment in the budget for bracket creep, and also Eskom's 12.7% price increase on the 1st of April. Private sector credit extension was up 3.6% in the year to the end of February, and that is obviously slightly less than January's figure of 4.59%, but it shows that households and businesses still lack confidence, consumers are not taking loans, and remain financially conservative. They're paying off debt, and they're not taking on any new debt. Mortgage debt was virtually unchanged, and credit card debt was up about 8.4%, but that's still less than it usually is up. ABSA's Purchasing Managers Index was up 4 points to 48.7 in March, but that's still below the 50% neutral point, which shows that manufacturing is still contracting, but it is better. Business activity and sales were up sharply, with ports remaining a problem, port usage remaining a problem. Of course, Eskom's 12.7% increase from the 1st of April will hurt business. But manufacturing is definitely starting to perform better in this country. That increase in Eskom's prices is forcing the mining houses to make alternative arrangements for electricity. Sibanye recently commissioned South Africa's largest wind farm, so that will have a huge impact, and it will mean that they no longer need Eskom's electricity as much. They are reducing their dependence on Eskom. Amplats, which is now called Valterra, is building a new 100-megawatt solar farm. So each large user that leaves Eskom damages Eskom's position financially. Now, of course, the new distribution company is accelerating this process. So in our opinion, Eskom is basically dying. The South African Revenue Service, SARS, collected 8.8 billion or 6.6% more than was budgeted in the 2024-25 budget. Personal income tax increased 12.6%, corporate tax 2%, and VAT was up 2.3%. Lower imports, of course, hurt tax collections, but tax compliance has improved quite a lot. The two-pot retirement system yielded tax of 11.9 billion, so that helped. Kieswetter, who's in charge of SARS, says that there are now 16 million people employed in South Africa, but only about half of them earn enough to pay tax. While those who are at the top end of the scale, who earn above 560,000 a year, are paying about half of all the personal tax. All right, let's look at the rand. Just going to put the graph on the screen here. Right, that's the rand dollar. So the further up this chart goes, the weaker the rand is. The further down it comes, the stronger the rand is. So you can see here that the rands fall to about 19, just over 19 rand to the US dollar. It was caused mostly by Trump's Liberation Day. See, this is Liberation Day over here. This is where Trump brought in his 25% tariff on vehicles. And then we had Liberation Day, and now the rand fell all the way back to 1993. All right. And that is caused, of course, by a shift towards risk on amongst international investors. So Trump's Liberation Day caused a sharp move towards risk on, and that resulted in the S&P 500 collapsing, and also emerging markets coming under pressure as people moved their money out of high risk, high return assets into more stable, more secure assets, particularly, of course, gold and treasury bills, government treasury bills. The rand, of course, is one of the most liquid emerging market currencies, so it took a pounding as investors moved away. The difficulties with the local budget and the government of national unity were basically a minor factor. Most of this was caused by Trump. And of course, now that Trump is backing down on tariffs, as you can see from the chart, the rand is gaining steadily. In fact, yesterday it closed at 18.16, so it's more or less recovered everything that it had lost as a result of his Liberation Day announcement. But from the time that he was elected, the rand has basically been in a downward trend. So the election is over here on the 6th of November, and you can see the trend has been that the rand has been weakening. But it is now getting stronger. The intraday low, which is the top of the spike here, was 19.93, nearly 20 rand on the 9th of April. Okay, we believe that the rand will continue to be volatile, but it is steadily strengthening now. Trump's actual tariffs, the ones that are actually implemented, are likely to be far lower than what was announced on Liberation Day on the 2nd of April. One of the reasons the rand is strengthening is because South Africa's inflation rate is very low at 2.7%, and we still offer a very good yield on our government bonds, on our treasury bills. The 10-year bond is currently has an effective yield of 10.6%. So if you take the inflation rate of 2.7% off that, this means that overseas investors are getting a real return of 8%, and that's pretty good. That's pretty good. So we see the rand strengthening back all the way back to about 17.1, somewhere around there, to the US dollar. Now let's turn our attention to gold. Obviously, let's go put a bit more data on the screen here. Here you can see the original resistance level at $2,060, which we had pointed out to you quite often. And that's where it broke up through that resistance. We reported that in March 2024 in our confidential report and suggested that gold would now move up. And of course, it's been moving up very quickly since then. That upward move has been accelerated, as you can see at the end of the chart here, by Trump's tariff policies. And it reached an all-time record high on the 2nd of April, on Liberation Day, so-called Liberation Day, and it reached $3,500 for an ounce of gold on that day. Gold, of course, is the most secure asset in the world, and so it has the lowest return. It has a zero return. It does not pay dividends, interest, or rent, and it does not add 10% to its weight every year. But it has held its value for thousands of years through wars and political disruptions of all different kinds. It is more secure than US Treasury bills or any other government debt instrument. The smart money, in times of trouble, always move into gold. They move their money out of other assets into gold. Uncertainty in the world in world trade is come about purely because of Trump, and this has caused gold to spike. As Trump backs off from his tariffs, gold has fallen back a little bit, but just a little bit. We expect it to continue rising. One statistic that might interest you is that I bought my first Krugerrand in 1985 for 600 Rand. Today that same coin is worth 61,500 Rand. So that's something for you to think about. We advise South Africans to hold about 10% of their wealth in Krugerrands, even though it doesn't pay dividends or interest or anything like that. In a country like this, which is an emerging market, it's a good idea to have a percentage of your wealth in Krugerrands. They are infinitely transportable. They do not have your name on them, and you can sell them in Hong Kong or Shanghai or in Paris or London or New York for the same price that you paid for them here, or whatever the gold price is at the time. So they are infinitely transportable, and they are very liquid, and they are valued all over the world. So they're a great hedge against the political uncertainty of being a South African. All right, now I'm going to do some work on companies. The first thing to notice is that there's a new listing being proposed. The technology company ASP Isotopes is planning to list on the JSE later on this year. It has 3 factories here in South Africa where it refines carbon-14, silicon-28, and ytterbium 176. I don't know how to pronounce that. Ytterbium 176. These radioactive isotopes are mainly used in medicine for pharmaceuticals and also to some extent in quantum computing. The company has been listed on the NASDAQ for a long time, since 2022, and it already has a market capitalization of $400 million or about 7.4 billion Rand. We believe that when it comes to the market here in South Africa, it will be a solid blue chip investment. So watch out for that one. All right, the next company I want to look at is Foresight. Now, Foresight is an interesting business. I'm just going to put a bit more data on the screen here. We originally added this share to the winning shares list on the 4th of August 2024 when it was 31 cents. And the reason we did that was because it broke above this long sideways movement, which you should be able to see here on your screen, and broke up to a new record high, and we said, okay, that's enough for us, and we put the share on the winning shares list. It then peaked at 110 cents about 6 months later on the 14th of February 2024. And since then it has fallen back to find support at around 70 cents. In the past year, it's been moving sideways, right? But staying more or less above that support at 60 cents. Despite its excellent results, it's had very good results. For example, on the 16th of October last year, it published a trading statement in which it estimated that headline earnings per share would be up by between 31 and 40%. Now, in fact, those results have been published, and the headline earnings per share were up 35.5%. So that's very good. It's also just made an acquisition of a human resources and payroll company called X4. It paid 21.2 million for that, half in shares and half in cash. X4 has got customers in 20 African countries, and it's expected to widen Foresight's customer base and bring in AI skills, which are obviously very important. In our view, Foresight is a company that's growing both organically and by acquisition, and we think that institutions will soon start to recognize it and buy up its shares. So it's still a penny stock, trading at 60-70 cents, and this may be a good opportunity to get into it. The next share is one of our old favorites that you have heard me talk about many times. That's Capitec. All right, I just want to put more data on the screen just to show you. We added it to the winning shares list a long time ago, in November 2023. At that time, it was about 1,855 Rand. But long before that, if we go back even further, we wrote an article about it a long time ago, all the way back here, in 2018. We wrote an article about it on the 19th of February. At that time, it was worth 800 Rand a share, and then we advised people to get into it. And then we finally added it to the winning shares list over here when it was 1,855 Rand a share. And last night it closed at 3,382. So it's gained more than 55% per annum since we wrote about it. And that's excluding dividends. So this is undoubtedly one of the best performing investments on the JSE, and I hope that you've got some. This is a share to buy whenever it shows any weakness, buy some more. That's our advice. Okay, the next company I want to look at is Bluetel. Bluetel is a company that sells secure tokens, okay, like airtime, starter packs, electricity, and so forth. Right, let me just... We originally drew your attention to it when it broke up through its long-term downward trend line. You may remember that this is the company that bought Cell C in 2016, a very bad move, and it suffered badly from that. But it started to recover, and when it broke up through this trend line, this downward trend line, which was a long time ago in February 2024, it was then 360 cents. And since then, the share has been performing very well. We added it to the winning shares list on the 23rd of January 2025 at the beginning of this year. It was then 610 cents. It's now trading for 850 cents, which is a gain of 39.3% in just 3 months. We believe it will continue to perform well. The next share I want to look at is Core. Core is a highly risky mining penny stock. Its only asset is a potash mine at a place called Sintukolo in the Congo. So the location makes it obviously highly risky because that place is politically unstable. But we've always thought of it as being a pretty good share for a speculator. Okay, we added it to the winning shares list a while back over here on the 16th of May 2024 when it was just 20 cents. The main reason we did that was because it broke again above this long sideways pattern that you can see to the left here. After we added to the winning shares list, it eventually reached a peak here of 83 cents a little while later on the 3rd of October 2024, and then fell back to find support. But it's been very volatile, and now it's trading for about 66 cents. So since we added it to the winning shares list, it's gone up by 230 cents. If you're interested in this company, just remember it remains a highly risky commodity penny stock. Okay. Next share that I want to look at is Pan African. Pan African, of course, is a gold retreatment company. It's listed on both the JSE and also on the London Stock Exchange. It has benefited from the sharp increase in the dollar price of gold. We first added it to the winning shares list on the 31st of January last year, and it was then 430 cents. We also drew our attention, as I mentioned earlier, to the break of gold above its resistance level at 2060, which happened in March last year, and that was in the March Confidential Report. And then we published an article about Pan African over here on the 13th of May 2024. So that was quite interesting. And of course, it's made this acquisition recently of TCMG, which is a mining company in Australia. It's bought 90% of that company. And it's been going up very nicely. It's now reached a much higher level. It's closed yesterday at 1,161 cents. So the highest it's been is 1,231 cents, which happened over here on the 16th of April, but it's still trading quite close to that, as I said, at 1,161. We regard it as a good speculative investment, But of course, you must bear in mind that it is a gold company, a gold mining company, so its fortunes depend very much on the future of gold. The next company is also a gold mining company and one of our favorites, and that's Harmony. We have mentioned this many times and we've written articles about it, but it remains a great stock, and I want to draw your attention to it again. We added it originally to the winning shares list over here on the 16th of November of 2023. So that's about 18 months ago. We published an article about it excuse me, on the 25th of March last year, and it has since accelerated, and it's now trading for just under 300 Rand a share. So when we first put it on the winning shares list, it was under 100 Rand. It's now 300 Rand a share. Of course, its performance continues to depend on the gold price, but it is a very innovative company with very good management, and it has very good recovered grades of gold. Okay, folks, well, that's about all I have for you today. I hope that you found something of interest in what I've had to say, and bear in mind that we will be doing another webinar like this one on the first Wednesday in June. So put that in your calendar. Thank you very much for listening to me.